spreads. I'll consider either 10 wide or 5 wide, just depending on what the strikes look like and what those deltas are at. But we're in a slightly positive gamma territory. If we get below 64.50, it turns to negative gamma, and we'll see if that reinforcement loop sends prices down into this inefficiency that happened on Friday. But this technical correction, unless it's going to be played out with NVIDIA earnings, unless it's going to be played out like literally the market doesn't budge at all through the month of August, which is this Friday, like the August 29th expiration is going to be the end of the month. And then we roll into September. So we'll have the 29th end of the month. The 1st is next Monday. So we're trading a new month and the final month of the quarter. And then we're going to be hit with non-farm payroll. Then you're going to have CPI, PPI data. Then you're going to have the Fed on the 17th. So these next few weeks we'll have some catalysts coming each and every week. Prices are likely going to remain pretty stally, pretty toppy, pretty, grindy. But if they roll over, I mean, all it takes is a break below these recent lows. 63.50, we break below that, then we're talking most likely a quick run down to some moving averages. So anyway, let me get the chat up for everybody. Catch some comments here. Say good morning to everybody. Okay, Dave in the house, Ray in the house. Yep, chat's open now for everybody. Good morning. Okay, so room is open. And here we are. So last week with the Jackson Hole pop, big move on the Dow, big move on the Russell. S&P in one day just popped right back up. It's interesting to see how this week played out. It was a softer, Monday just kind of rolled over from these previous all-time highs. Monday, super choppy day. Tuesday, sold off. Wednesday, sold off, came back. Thursday, chop. Friday, rip. The market finished the week positive because that's where we opened. We didn't breach the highs. We did poke the highs in the SPY, but we didn't breach the highs on the SPX. We did take out that low on that Wednesday close. This is where I think the market was kind of heavily manipulating price action through Jackson Hole because to me, this is a tough area to get through without having some type of continued pause, struggle, resistance, or a rollover into some correction territories. So I'm still looking corrective, which means I want to try to sell as high as possible today. I understand there is a pretty decent size resistance level, gamma level that price might try to find, but that's also going to require price hits all-time highs. So we're, opening up maybe 0.2% lower per futures right now, 0.27. So it's looking like we're going to open up a little bit lower, probably closer to the 64.50 gamma flip zone. So hopefully we can sell. It's be about 50 points or so, plus minus on the day is what? Today on the SPX on the 25th, plus minus about 24. So it looks like a lot of our sell prices are going to be probably around like 64.75, 64.80 are going to be our call levels just based on the expected move. I'm probably going to keep those pretty well stacked where, this high can start selling, this high can start selling. To tighten up the risk a little bit, I'm probably going to go 5 wide. So if I started selling at, let's say like 75, I'll go 75 by 80, 85 by 90, and then 65 by 05. So I like to layer in 10 wide because you can kind of sneak in 2, right? If I sold at 75, I can go 75 by 85, 80 by 90. I like to sell those. But with that 10 wide, if price comes up, that 10 wide is something that can be challenging to defend without getting like a perfect fill. And I will tell you, after the last couple months, trading more credit spreads throughout these 0 DT days, asking the price to fill you at $5 credit out of a 10 wide is sometimes challenging. Getting the price to fill you at 7 or 8 or $9 out of a 10 wide is very challenging. So a lot of the good fills that I've gotten have not been 9 out of $10. It's been 5 out of $10, 6 out of $10, 3 out of $5, 3.25 out of $5. So I've had to modify some of those like zero DT spreads where I'm not getting the full fill that I want, which is okay. I mean, sometimes it works, sometimes it doesn't. But point is, I mean, the plan for me today, we'll just follow the same daily profit plan routine, which is we have VIX looking to be a little bit higher. We are still in a positive gamma environment, which means that we should see every dip be bought, and we should see the market starting to push a little bit higher. So a positive gamma is also kind of like a long gamma environment, which means it's easier for every dip to be bought, and possibly be selling calls to the top. So like positive gamma usually is like a slow drift environment. Negative gamma where things get a little bit more volatile because bigger swings and bigger flips, bigger swings to the downside is going to be forced buying, but it also could kind of trigger that activation point where things get dumped and dumped faster. So anyway, I still look at the technicals. That's all I'm trying to focus on. This 50-day moving average is now 70 plus bars. We're at that time of the season, and like I said, whether this market is trying to do everything in its power to just push to these highs, and then until I don't know, maybe the Fed, maybe it's Nvidia this week, maybe it's the first part of September. I don't know. But I do think that a correction is really near. If we somehow don't have a correction through September, or even through like this final week of August, this August September window, I'd be extremely perplexed to see the market just stay like this without having some bigger correction later. So to me, it'd be more helpful to actually have a correction, to have the market at least go sideways, to let some of these moving averages catch up a little bit. Look, if price went sideways for a week or two, the 50 period can still catch up. That still technically counts as a correction because we're hitting it, right? But just keep going higher and higher and higher and higher away from it. It just gets to overstretched territory, and then that reflexiveness, like the market's going to snap back to it, and then how violent it gets might be, it snaps to it, and then dead cat bounces above it, and then snaps lower, and then all of a sudden the whole environment changes where it's like, oh my gosh, what do we have? Did we just top out, right? So anyway, we'll see. But I looked at I had a good video that I sent out to my Project Options Edge Friday. I sent like a 25-minute video out to Project Options Edge, and we are sitting in quite a bit of profit. And so over the weekend, I sent the video out and I'm like, we've got a lot of positions that are running that are like 50, 60, 70% profit. I've got a couple that are 80, 90% profit. And part of me is like, yeah, I'll just wait a little bit longer. But as I approach, like we've got NVIDIA earnings that I think rolls over, if we all of a sudden see some down, like a down week in the market, all those, it's like that positive delta that I have in the market by just having some ratio spreads. It's not worth the risk for me. So I think NVIDIA earnings is this week on Wednesday at the close. So today, tomorrow, I'm looking to protect some profit on Project Options Edge and get some of that buying power back. That also should help me lower my delta beta weighting, which all that means is granted, this is a lot of accounts that I have, but I'd like to reduce this number to like under 2,000. I don't mind having a slight bullish bias in the market. And a lot of this positive bias is because of ratio spreads, which are significantly below current prices. But stocks can certainly be a lot more volatile than the individual indexes, right? Like an index can fall 3 to 5%, but individual stocks that lead the way, i.e. NVIDIA could drop, 5%, 10%, and that will kind of violently shift the market. So a lot of this is kind of ratio spreads, which are way out of the money. And they still have a long put aspect, which can help reduce this overall like beta weighting, but this is kind of the weighting compared to the S&P. So I'd like to reduce this a little bit more, which means I want to get back more buying power by getting rid of some of those naked puts, and also reduce my beta weighted, positive beta weighted. I want this to be, I'm not going to say delta neutral. I'm not going to say that because I don't trade purely directionally neutral, but I want to lower this so I can have a little bit more nimbleness and more buying power to apply when I think the time is right. I already did that, Jason. That's why we have trades running for waterfall income. So waterfall income, we actually have a few of those trades already running. The one that's likely going to be expiring, it expires this week and coming into this Friday. Let me go back to this. Where do you have that trade in? It's right here. 65.25 by 30. That's a $500 bull. That's a bull call trap. So if we're up to 65.25 and 30 this week at all, that offers up a potential $5 winner. So that could be $500 plus the $1.60 as long as we stay below 65.35. I'm going to watch this one really closely because we have the open. We're trading at 64.50 or so. This is so far out of the money. This might actually offer up a bit of a profit trap right now. It looks like it's up. It's not up a ton. It's up like 15 bucks, but this expires on Friday. So I do have a chance there might be a profit trap in this one. If I can see this trading for over a dollar, let's see, that is 15 wide. So I've got the risk on the credit side, but if I see this trading over like $200 profit, I'm going to take it. And then we go a little bit deeper out into our call condor here. These are all waterfall trades. So these are like the top. I've been issuing like 6,600 top trades on waterfall that are just near term through September, expecting a correction. Yeah, I'm not going to add a higher one because how far do I want to go? I mean, I think the correction is going to be now through September, October. Anything further than that, I want actually volatility to go up so I can do a waterfall income type trade that's going to allow us to take advantage of a dip. So if we have a dip, I want to focus on the waterfall income trades that I can get down here with a big margin for error, as opposed to calling the top, right? If this market just continues to go up and 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 up, I mean, you can see the same thing I do. I don't think the market's going to keep doing this. But I say that, and in 2017, it did exactly that. I know we didn't have the big correction in 2017, but what did it do through COVID? After a COVID crash, the market went up pretty much every single month for almost 2 years. Are we in that environment where fiscal policy is so dominant, monetary policy is irrelevant? Fed's going to cut rates. Who freaking cares? We're spending at like 8% GDP, like we're spending like crisis level deficits. Fiscal policy is super important. It has been since 2020, you know? So unless something like cracks and breaks or some leg falls out from the stool, we might be looking at a market that just refuses to roll over. And the silly part is, if everyone didn't experience so much pain through 2008, we'd have normal, pauses and dips and we'd have a recession. But a recession wouldn't be seen as like the worst thing ever because everyone attributes a recession to what happened in 2008. 2008 was an anomaly. 2008 was like financial Armageddon. Okay, rolling recessions should happen. It's basically the economy's time to reset. But the Fed has made it their mission to like pretty much do whatever they can to avoid us ever feeling the pain of recession. And so now we have bubbles. So anyway, I don't want to call the top because I think that there is left tail risk and there is right tail risk that most people aren't accounting for. The market now that it's excited that hey, the Fed's going to cut. Well, okay, well if the Fed cuts in September and possibly again by December, maybe even October, but we have 5 cuts coming until the end of 2026. Does that mean that the market's going to more lean into these rate cuts and push this thing even higher? I mean, the higher we go, the less time we have. It's like, as well as I do, a correction's coming. It's just, that's the hardest thing to time, So, I mean, I'm basing it on this 50 period, have had no pullback virtually since our bottom April 7th. That was like the low. And then we had this tiny little pullback here that was all throughout the crazy volatility. We had the little dip before the US-China trade agreement gap, right? And then we had a ceasefire. And that's it. Like, I don't even know what this thrust was right here. This was something like there. I don't even remember the catalyst. This was our July 31st, August 1st. I guess it came into a monthly expiration, but the market rolled over briefly. We had like an exhaustive gap fade on Metasoft. It was a Metasoft, Meta and Microsoft when they reported earnings on that like Wednesday. We had Apple, Amazon, Microsoft, and Meta all reporting earnings, and that was that big gap up on Thursday. and then sell off on Friday, and then the following Monday, boom, right where we left off. So it just the market just goes into, needing some fuel and kind of backstopping all these little dips. But I think it runs out of steam, and now is like the perfect window to do it. Like through now, let's like this week, final month of August into like September, mid-October. So that's usually where the market is seasonality wise the weakest, right? And I've said this before. February, March, April is typically a weaker window for the market, and August, September, October. So if you're ever wanting to buy dips, that's usually when the market's producing them, is in that like 60 to 90 day window between February, March, April, and August, September, October. Does that mean you don't want to trade those times? No, it just means have cash at the ready and look to invest, because that's a lot of times when the market can shake out. Okay. All right. So we have about 20 minutes. Let's calculate some of our highs. This week, So this week I will be highlighting my pinch point scanner, and we will be having a masterclass. It's another 3-day workshop this week on pinch point scanner. This is going to be a pretty active pinch point scanner masterclass because it's going to be teaching core strategy and trading every single day. So Tuesday, Wednesday, Thursday, if you'd like to join me, my job is to be on the hunt for some trades. Okay, so I'll talk about this at the top of the hour, but I'm hosting a 3-day workshop this week on Pinch Point Scanner to use it, find some trades, and hopefully get another, two, three, four, five trades out this week, just using spoon-fed volatility expansion plays with Pinch Point Scanner. So, we've had an awesome run with it so far. We are at 83% winners, and we still have trades running right now. We've had a couple sprinkled in the last few weeks. A lot of the expirations are out through right now. I think we're starting to get into our October and November expirations. A lot of those are just automatically taken with profit targets. So my favorite thing is waking up with a profit target that gets a hit, that's hit, and the broker can close me out. So I think the only expiration I have right now is there's a September 19th expiration, and then everything else is later. So we're going to be looking to like October, November, December expirations, but those are set up the trade, set the take profit, and just continue to hopefully knock out 80+% winners at like 30, 40, 50% profit targets and just keep grinding. It's actually such a fun strategy to have. It's such a fun scanner to have, because I find trades that I never would look for on my own, and they're just plays that are just ripe for movement, and it gives us a high probability of direction. Okay, so I'll be talking about that in a little bit. Let's go here. All right, save that for later. Let's get our levels for today. So 64.66, VIX is trading around 1505. So about a 0.94% move based on the previous day's close, which would be Friday, which the market just went straight up through that 10 o'clock move and didn't go anywhere else. Like literally, that was the reaction. And in the 5 to 10 minutes of Powell's speech, it was really just a carefully crafted message. Um, he said that they're watching the labor market. They think that it's appropriate to adjust policy. Now, what I was trying to read between the lines on is when they said adjust policy, is it just based on monetary policy, or are they talking about like adjusting inflation targets? Um, I I think that has bigger ramifications if the Fed is willing to adjust inflation targets to say instead of this target 2% that's been running for years and we're actually well above that, if they were to modify that policy and say that we're willing to accept like a 2 to 3% inflation target, right? And that essentially means that there's still room to cut. So it's all kind of the same feedback loop. They're likely going to cut rates. Okay. Catherine, that should have been posted. Deanna, can you verify that class 3 and that little quick guide for waterfall last week with that 3-day workshop? Can you see if those are all posted? Yeah, it's up. Okay, check that out, Catherine. That should be day 1, day 2, day 3 in the masterclass area. Yep. Okay, so VIX 0.94 based on the rule of 16. So let's go from the previous day's close right in here, 0.94%. That puts us way above highs. I don't think we're gonna have that type of move for a Monday. That puts us around 65.20, 65.20 to 65.30. That would be fresh all-time highs if we get there. So potential top yesterday's close. And if we gap lower, that's going to be modified slightly, right? If we gap like 0.2, 0.25% lower, gap lower, that's going to adjust a little bit lower as well. So I'll just have a modified, top. Let's say we gap down, should be around 64.50 or so. So about 0.2%. Yeah, so 64.50. Let's say we put a high in from there, 0.94%. Now we're talking about a high around 65.10. So I'd say the 65.10 to 65.15 would be modified top based on the gap lower. Gap lower open if the market just immediately buys that dip. Okay, so I'm going to start with probably selling, I don't know, probably some somewhat aggressive bear call spreads. I might start, you know, I don't know. I guess for me, it's like I don't mind taking on more premium. If I could sell an 80 by 85 and get $2 for that trade, and if I'm right, where price just stays sideways and range bound, it doesn't get to all-time highs today, um, it would be awesome because that would be hopefully picking up some good premium and stacking up a couple of nice winning orders on the bear call side, and also trading small enough where if price does get up here, I can still handle, averaging into another couple of contracts. Okay, and then on the low side, again, it's a Monday. I wouldn't imagine the market's going to be too directional today, especially after a huge shakeout on Friday that was a lot of volatility. So I would like to imagine that today's going to be a little bit more tame. But if we look at the day's close from Friday, go down 0.94, 6405, or yeah, 6405 to 6400. Potential bottom based on yesterday's close. And I don't mean yesterday, I mean Friday's close, I guess. Friday's close down here. And then if we have a push lower by about 0.25%, so starting around 64.50, going down 0.94, about 63.90. I'll put this as modified bottom with the gap lower open. Okay. And how does that play out? Well, if we gap here and then we pull up, this would still be my modified measured move. Okay. So more than likely, I mean, I'd say that this kind of high and low for the day are relatively safe. Okay. Doesn't mean it's perfect. Last week was the first time I've seen in months where I've seen the volatility index read. I mean, look at this VIX from last week, right? I mean, the VIX is trading at 16. We had a plus 54, 55, market maker move on the day, and the market ripped up 100 plus points. We shattered that VIX rule of 16. That was frustrating. It's like it rarely happens. I mean, I was selling 70, 80, 90 points out of the money and still got threatened to the upside. I had to, scale in and reduce some of the risk. I still took a loss on Friday, net. It was a loss at 845, loss at 825, but I still gained 625 back. So Friday, despite the crazy move, 845, 825, I was down 1670 and then 325 and 300. Clawed back to, I still lost $1,000 on Friday. But I lost $1,000 in the backdrop of hitting all-time highs in my portfolio again for the year. So, it was absorbed by other trades that were running, which is totally fine. That's why zero TT isn't like an exclusive thing. It's just probably 5 or 10% of my account that I'm willing to day trade because that's enough to grow. Like allocating 5 or 10% of this of my account to trading zero DTE, you can turn a pretty good profit. I mean, there's ways to grind out 5, 6, 7, 8% a year on that little allocation, just because the returns can be pretty consistent. So anyway, all right, we have 2 minutes before the open. Any questions going into today? So macro Monday, we're looking to open up a little bit softer in futures. Just taking a quick look. So here is the ES feed, which is S&P futures down about 0.21, NASDAQ futures down about 0.3%, Dow futures down as well, Russell futures down as well. So everything's looking red at the open. VIX is up a little bit. Dollar index is check currency strength. So, tight on the currency axis. So Japanese yen a little bit softer. Gold and silver. Gold is down 0.2, silver's down 0.6. Bitcoin had a pretty ugly weekend, down to 111. I think we're seeing some fresh lows on Bitcoin actually. Yep, so we've rolled over, finding some dynamic support, hopefully in one of these areas. If the market rolls over a little bit, Bitcoin's probably coming down for a bit of a correction. It looks a little bit, less fun if Bitcoin's down to like sub 100K. Not going to lie, like we break this 200 moving average, it's going to make some people nervous, right? We get back below 200K, we better start to show some bottoming here if Bitcoin's going to rip. I think there's still a lot of accumulation. Just don't take it lightly. It's like there's going to be volatility coming. Okay, do I think they'll turn green? I mean, they can spend the entire day fighting back. That's what we've seen happen quite regularly is futures down 0.2%, 0.3%, markets open red. What do they spend the whole day doing? Trying to fight back. Okay, but as long as we can keep, the eye on the prize, like if I can sell up here and see the market just be sideways today, we should be good. I mean, is the market going to gap lower and find all-time highs today? I'm hoping that that's not the case. I mean, if we couldn't find all-time highs on Friday, I just think that was kind of some Jackson Hole shenanigans. Which I mean, if you trade Jackson Hole, you know that the market does stupid stuff. Okay, so I'm going to focus in on just selling. I know that 80 to 85 levels, it's pretty firm resistance. So I'm going to focus on that for my sells, and I'm just going to look at primarily some bear call spreads this morning. So let's flip this, go to the top side, so I can go 80, 85. Okay, so we've opened up a little bit lower. If I go 80 by 85, 90 by 95, ugh, those deltas are weak again. So I get $1.30 right there. See if I can get $1.30. It might be a little bit better if I did like 80 by 90. I just don't love going 10 wide. I mean, it's not giving me too much more. I'm going to take more defined risk. So I'm going to go 75, 80, 85, 90. Try to get $1.20 out of this. Come on. All right, $1.15 should fill. Come on. Oh my gosh, dude, that's already down to 90 cents. Good Lord. All right, that was fast. Well, 80 by 90, 85 by 95. Are you kidding me? 10 wide on each one for $1. That is insane. All right. Well, super frustrating. Let's see. All right. Well, I'm not going to settle for just like a crappy fill. That's really bad. I'm going up like 25 points and I can't even get a good fill. So let me try 75, 80. See if I can get that filled for $1. And then 85 by 90. Try to get this filled for $1. And I'll go 95 by 65. Try to get it filled for $1. I'm just going to try to layer these in. I can't believe that it's offering such garbage credit right now. Hmm. All right. Hopefully we can get filled on at least one of these. So this is a 75 by 80 at 60 cents right now. If I want to sell, like the put should be trading pretty well. I mean, if I'm looking at like 64.20, I mean, look at the difference. If I look at a 20 delta, A 20 delta call is at 255. A 20 delta put is at 265. So we're getting a little bit more premium on the put side right now. Is this market really going to give me like jack squat for profit? 60 by 70 gives me $3. All right, I'm going to take a dollar or something out of this one. This is a 65 by 70. I think that's a little tight, but I at least want to get something. If the market's going to finish like softer today, so I get a dollar 20. Am I, did I start at 70 anywhere? 75.80. Okay, I'm going to go 70, 65 by 70 for a buck 20. Man, these fills are really tough. All right, geez, Pete, that was ridiculous. So I've got a 64.65 sell call. I'm doing a five wide. I'm getting filled. I'm posting this in daily profit play right now. All right, so new trade. I'm selling the 64.65 call. All right, then I have pending orders for more bear call spreads. I'm looking at the 825 expiration, 60, 64.75. Then the 64.85, 64.90. Then 64.95, 6,500. Okay, that should give me some forgiveness there. If I'm stacking them in for a dollar credit, they're not filled yet. So I'm just gonna let these hang out and see, how the rest of this. So you can see my stacked up trades on the call side right here, and also this order. So these are pending. So all these are pending. Ugh, you can see it pending. But the one that's in is the 65 by 70 right now for a buck 15. Okay. On the put side, prices are still pretty chill. It is Monday. I mean, it wouldn't be terribly surprising to see the market cooperate for the day. Let me put on just a standard daily profit play. So if we've got like this 16 delta, I'm going to make sure I can at least get a dollar for this five wide. So that's a 16 delta and a 16 delta. I mean, I get a dollar 10, dollar 15 out of this trade. Try to get a dollar 15 for this. Dollar 10. Bueller, come on. Watching this mid price at a dollar 15. All right, just got filled at a dollar 10 credit. So 825 expiration. Dollar 10 credit. And if we go $1.10, so I'd say 85 or lower. All right, so that's in the alerts. Okay, so it's in the daily profit play alerts. Check the Telegram channel, and then I'll get those posted in the tracker. So for this one, two, three, four. This is SPX. This is a waterfall. All right, so in at $1.10, and I'm gonna close this down for so 80, that'd be 30, but 27%. So I'm gonna close this down for 80 cents. Okay, this one I just have some pending orders. So pull this in for $1.15, and I'm just going to continue to have these other ones stack up. So the 64.75 by 80 is trading for 80 cents. This one might get filled at $1. I'm going to keep an eye on these and see if we can stay below 64.65 on the day. Okay, let me pull my pinch point. Take a look at that. So we have our watch this Wednesdays for pinch point scanner. Right now I've got 9 stocks in the go zone. Looks like we threw another one in from last week. There are a lot of stocks, Nvidia included, that's getting ready for a move this week. It's get set. We've got some good pinching on Nvidia and SoFi, AMD, Robinhood. That's Carnival or that's Norwegian Cruise Lines, Citigroup, AVGO. That's First Horizon. That's Schwab. I'm not sure if Doc is in DocuSign, JP Morgan, Starbucks. I mean, DraftKings, like there's some good notables in here for the get set. Um, this is what I'll be talking about through my 3-day workshop this week on Pinch Point. We have 9 stocks primed and ready to go. Some of these, based on the expirations and based on the options chain, they might not be trades. I took a look at 8 stocks last week, and I didn't take a single one because we had like a $5 expected move, and the spreads are 5 wide. So the strikes just didn't give me the precision to trade it, which is okay. That's part of the game. But still, I want to have stocks that are prime and ready to go. Okay, dynamic trends. Yep, I'll bring it up here. So ATR levels, we are trading back and forth. So our 50% ATR, it's not the largest gamma level today. And I would say, given the fact that market almost went like 200% last week on Friday, I think this market's going to stay probably less than 50%. And maybe if we're targeting anything, it's maybe sideways in here today, maybe going down to the 50% to the downside. So I could just see the market being very range bound today. Because, and again, if we're going to get to the 50% up here, we've got to hit all-time highs. This is up to about 95. We'd have to break the highs by 10 points. So there's just a monster inefficiency here. Prices may not fall, but I think just struggling to really go anywhere, hitting some resistance levels should hopefully give us some decent resistance. On that note, if I've got these pending orders at $1, I'm going to try to increase these a little bit. Like if price is gonna hit 75 by 80, I'm going to try to at least get. I think I should at least try to get like 250 out of this one. So I'm going to put these in at this is going to be a 2. a 250 spread, 75 by 80. Actually, I'll leave that one for $1 and I might double that contract up at a 250 as well. So I'll leave the one in for $1 because that one might fill. So I'm going to go 75 by 80, 75 by 80. This one will be for $3.50. So I'll take one for $1, take another one for 350 at that 64.75 by 80, and then the 85 by 90. I mean, if I can get filled on those for an extra buck, just trying to manage risk overall. I mean, if I get filled on one trade and make 115 bucks, that's fine. I'm trying to stack in a little bit more probability that we won't make all-time highs. We've got that call wall around 64.70. So right here, 64.70, pretty good resistance. 64.80 resistance. And 6,500 is going to be a bit of a stretch today to get to fresh all-time highs, hopefully. I mean, do I think the market's going to collapse today? Probably not. I mean, if we're selling puts around the lows, let me check this really quickly. So the puts we talked about, potential bottom around 63.90 to 85. That's with that gap lower, or the 6,400 zone, where those puts offering right now. Not a ton. I mean, if I could somehow pull $1 out of this one, I'll sprinkle in a couple bucks here. So I'm going to take kind of the behavior of a Monday with mostly range bound trading and put in some pending orders and see if I can get filled at credits that are acceptable. $1 out of a 5 wide isn't that bad. I can also layer myself in if I like a direction on the day. But so far I'm just in for a buck 15 on the call side. Okay, so what I'll do for daily profit play is I will post over here, positions, move off this. There we go. All right, so I'll sprinkle these in. I'm just going to post this whole image in daily profit play in the Telegram. All right, so uh, current orders, I'm just posting this in my daily profit play alerts. One filled, multiple pending, bear call spreads, bull put spreads, 5 wide to manage risk, $1 credit minimum. At highs and lows. All right. So if you want to follow along, looking good. So I've got 2 trades in so far. So I've got two filled actually. So two filled. Two filled, which is a one bear call spread. And one the one that was filled is where's it at? Right there. 75 by 80 and 25 by 20. Okay, updated. Okay, Susan for Telegram. So it's the same with any of my services. If you want any alerts, any live trades with me, Daily profit play alerts. You got to sign up for the alerts. You get a members classroom, Telegram access. I'm posting those trades every morning. Waterfall Income will be live today at 12:30 p.m. We had an awesome 3-day workshop last week on the master classes discussing strategies 1 and 2 and putting it all together. Ended up placing a trade together on Thursday. Those master classes have been posted. Newsbreakers, I will be posting a trade this week in Newsbreakers. I want to see if I can get a trade running on NVIDIA. They have earnings on Wednesday after close. Double up. I need to see some good directional plays, and I'll try to get like a high probability direction this week for a big reward, low risk, high reward trade. Pinch point. I'm running a masterclass workshop this week, Tuesday, Wednesday, Thursday. We'll talk about it here at the top of the hour, but also running like live trading sessions. So it's going to be core one strategy live trading session all week long. So Tuesday, Wednesday, Thursday, the scanner's great. Trades are awesome. We're winning 83%. We're setting to take profits. I think I've hit, out of those 24 winners we've had, I think 22 of them were automatically closed out by the broker. The other two were as we were talking through them, or maybe my final hour sessions on YouTube, I just took 47% profit instead of waiting for 50% because it was just in front of my face and I could take the profit. Project Options Edge, I sent out a video last week. So anyway, point is, if any of these services you want to be a part of, just contact the team. Support at prosperitybub.com. Reach out, inquire about a service. And then, my website gets you into this daily profit plan room, so you can come and join me live every single day. Once you're a member, if you want to email me on anything, send me an email. But, the best part is come to this room every single day. I'll sprinkle in some trades every single day for my members and for alerts. And if you want to join, easiest place, support at prosperitybub.com, and then hopefully it helps. So we index trading every single day, index trading every single week, mostly earnings plays and high major, high event catalysts. Double ups is index trading, super liquid ETFs and indexes on low risk, high reward. Pinch point volatility expansion plays on thousands of stocks. I need 5 or 10 a week, and I probably find hopefully 1, 2, 3 a week that I can trade because they price out the right way. I'm looking for trades that offer us at least 100% upside, and it's easy to make 30, 40, 50% with those automatic winners. Crash insurance is how to protect the portfolio. I think this is something you must have. It's honestly not. It's a very inexpensive class. It's $197, but that's about what it costs me to hedge. Like for me to risk like $200. That's a trade that might offer me $2,000 of profit. I risk 200 to make 2,000. I don't need to get paid very often to have a hedge work out, right? But if I'm right, once or twice a year on a hedge or correction, it usually pays me 10, 15 to 1, 20 to 1. I've got hedges out right now that are paying me potentially 20 to 40 to 1. All it does is help me protect the downside. So rather than, you going with the turn in the market, it's like you're kind of bulletproof, at least protecting some floors. Okay. And then Project Options Edge is, I put this one near the bottom because this is where, we probably use the most buying power. We probably take the most variety of strategies. This is more like master classes, kitchen sink approach, whatever it takes approach. I don't take a lot of losses in this one because I'm also willing to own some of the underlying shares and work through positions. So I just sent a video last week. I think out of the 20 positions we have open right now, 1 is negative and 19 are positive, somewhere between like 50 to 90% of our credits. So I'm going to start taking some profit. I just thought about it a lot over the weekend. I want to, like I said, eliminate some of my delta weighting. I want to get rid of some of my positions for a nice chunk of profit because I've got them on a lot of my margin accounts. And I also want to increase my buying power, right? My buying power is now under 50%. And that's fine if I wasn't thinking we have a correction coming. So I'd like to increase this to maybe 2.2, 2.3, 2.4 million and give me a couple $100,000 to play with. And then that way, if I see a better opportunity to position for it, that's more allocation I can put in. Okay. So anyway, expect another video update from me for Project Options Edge, or just look for Telegram and see that I'm closing out some positions for profit. But these first couple of days are going to be pretty busy this week. Okay. So if anybody is new for Daily Profit Plan, love that you're here. Spread the word. This is a free show for everybody every single day. So all traders welcome. I'm happy to sprinkle in, the theme of the day, as well as I'm trying to sprinkle in some more, anatomy of the trade. So this week, for example, trading strategy breakdown. pinch point, I'll just give you like a sneak peek of pinch point. I look at what the volatility play is. Pinch point is usually a trade that does this. So pinch point is the goal of my scanner is to find prices that are choppy. Okay. When prices go dormant for a week or two, or 3, 4 weeks, or even a month or two, it is primed for a move. All right. And so basically, when I think that my scanner can find me a price where price is going to make a move, it's like kind of forced for that price energy to go somewhere. I don't truly care if the market goes down or goes up. Market makers do all sorts of manipulation moves where they're like, gap the market lower, then rip higher, gap the market higher, rip lower. But once this volatility expansion happens, we can get paid on that. Okay. And so my scanner is designed to find this trade, find this setup, and then we're able to place a trade and benefit from prices going up or down. Right. I personally like to trade it so it goes up or down. But obviously in the backdrop of a bull market, we can just place directional trades. So if you want to make it cheaper, you want to have like a high reward to risk, you can go directional. If the market's been up and it's sideways here, that continuation of what got us there can likely continue higher. That's momentum. But because we've had such overstretched markets, I'm like, you know what? I don't care if the market rolls over and corrects a little bit. Let's get paid either side. So pinch point just does a great job of finding me trades that I would never have found on my own. That's what's nice about it. Okay, so it looks like this. You get direct access to it if you get the pinch point scanner. Right now, of all the stocks of 9,500 plus stocks, I have some that are actionable here. I'd probably want to take a look at that, today and tomorrow during the workshop. NVIDIA earnings has earnings on Wednesday. So some of these, if they're starting to line up with some decent like 2, 3 week compression or 2, 3 week pinching, then maybe we can place a trade there and get this week as kind of a catalyst, or this next couple weeks as a catalyst. And then the go is like always in the go zone. These just depend on the pricing, right? Like not all these are household names. I know this is Campbell Soup. I know that's kind of it off the top of my head. That's the only one I recognize. Southern Company, I think is SO. That's an energy play. So that's it. Like I've got 9 stocks. I recognize 2 of them. It doesn't matter because I just go into the option chain and figure out, are they tradable? Are they tradable based on a good setup? And some of them are, some of them aren't. But if this can give me great trades every single week, I'm going to find some winners, which is how we maintain about 83% winners so far. Okay. In Telegram, they do have all those. So in Telegram, that picture that I posted there. So the picture that I posted in Telegram, all those W's in that picture are working orders. The W, I'll edit this. So W in the image equals working order or pending. And then F in the image equals filled. So I have a lot of working orders / pending orders. Okay. All right. Let's do a spot check today. So I've got my standard daily profit play up 3%. Big whoop. I've got the take profit already set at 27. Today's bear call that I'm filled on is down about 30 bucks. I'm just gonna let that hang out a little bit longer with other trades pending that have not been filled yet. So can I get this one filled? Can I get any of these filled? Yes, no, maybe so. Maybe it's just a perfect range trade for the day. I'm not sure yet. If we end up getting price, I mean, I could see price getting close to 70 to 50 to 40 today. I mean, as far as like a range trade, maybe using this as resistance, using this as support, just kind of hanging out for the day, just being like a Monday, crazy Friday, and then prices settle in for today. Okay. So I wouldn't be surprised to see prices, 70, 64.70, 64.40, and just kind of range bound for the day. So hopefully that at least gives me an opportunity for, I've got the 75 by 80. Try to get those filled for a couple of bucks. And then I have the what I do on the other side for the puts. 64. Yeah, I've got two puts right there as well. I could probably move those up, but I'm basing them off of my, potential low based on the VIX. Is 65 still likely for the week? To what, get tested? I mean, it could get tested. There's a JP Morgan collar trade, which is they do this every quarter, and this is an expiration through September, which is why I don't think we should have too much price breaching 6,500. It is a positive gamma call wall, which means lots and lots of orders are selling, selling, selling calls at 6,500. So hopefully that is a resistance level that holds this week and through most of September. Okay. I actually am trying to think if I put that in this chart. Let me check my SPX here. So I was looking at the 20 delta when we started Q2. I was looking at I guess it'd be Q3. I was looking at so when Q3 started, which would be July, right? July, August, September would be Q3. That would be around 6,600. So unless it was like a 30 delta, which it certainly could have been, I thought the call would be around 66, but what I've seen in the options chain is that call wall is at 6,500. That's where most of the sell side is sitting. So sell calls at 65 seems to be pretty firm. Overbought conditions with divergence. I know the market's been, pushing, 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 pressing up against these highs. I just don't see it holding there. But again, I could be dead wrong. I'm just trying to approach the market, with good mechanics every single day. All right. So let's see. I mean, this chart alarm set at all-time highs. If we make a run for it, I'm going to get filled at some hopefully decent credits. I might modify these credits to 75 by 80. That one might get filled. I've got another contract that's pending a little bit higher at 350, and then the 85.90. Let's see here. This one is the put side, call side. Yeah, I'm just gonna let those hang out. Yeah, Ted, I saw your question there. Ted's asking about waterfall income. Yes, today 12:30 p.m. will be waterfall income. Yep. Okay. So intraday, we're just gonna hang out. Let's see what happens with daily profit play. I would imagine my standard daily profit play is going to be working out pretty nicely today. Take profit's already set, so if that happens to get hit in these next 60 minutes while we're together, that's fine. That's what I would expect to see. If price goes down to revisit, so I've got a chart alarm set at 64.82, which are the recent all-time highs. I'm going to set a chart alarm down here at 64.40. There's a good chance that if my 64.40 price is getting hit, that my bear call spread for a buck 15 is probably trading for, if it's less than 15 cents debit, I'm going to close the trade. Okay, so if I can try to grab 100 bucks out of that trade, I'm going to take that winner. So I'm going to set another chart alarm here at 64.40. I'll put it at 41, and then I'll check on my position. I'll set a take profit on this one. So $1.15, see if I can close this thing down for 15 cents or less. Okay, so positions are in right now, pending orders, and take profits. All set. All right. So I'd like to switch gears here. Pinch point scanner, Tuesday, Wednesday, Thursday. Masterclass 3-day workshop and live trading sessions all week. Okay, we'll talk about it today. We'll talk about it tomorrow, Wednesday, Thursday, Friday. My live workshop will be running Tuesday, Wednesday, Thursday. So we'll spend at least an hour together. My goal is day one is tomorrow. This 3-day workshop. Day one's tomorrow. It's going to be all about the core strategy. And if we'll sprinkle in at the end, the nice part is the trading side is actually very quick. So I just need this scanner to give me trades and I go in and price them out. Okay, so we'll teach the core strategy on Tuesday. We'll look at some trades together. And then on Wednesday, Thursday, it's just going to be looking at all of these. So if I've got more that pop up on the Go filter, great. We're going to take some more trades or try to price out more trades. I'd like to get as many of these get sets that I'm interested in. I don't mind taking trades if the get set filter is at least showing like 1 or 2 weeks of consolidation. If I've got 1 or 2 weeks of pinching, my get set is still a valid filter. Okay. So ideally, I want everything to go in the Go filter, but get set is for me kind of good enough if I've seen at least a few weeks of consolidation. And some of these are some household names with good volume and liquidity. Like again, the whole market is going to be watching to see what happens with Nvidia today, right? Like Nvidia Wednesday earnings, it's going to be kind of the make or break for the market. Do we, hit higher highs? Do we have an exhaustion gap and then we fall going into September? The timing of this could be really interesting, right? I mean, prices can move in all sorts of nuances, but would anybody be surprised if Nvidia has great earnings, the market's all excited, but it just doesn't hold, right? Like it manipulates the highs, it pokes higher. Everyone's like, sweet, all-time highs. Nvidia had great earnings, and then it just fades for the next day or two, and that turns into a trade that happened to be a lot like Microsoft, which is we still haven't recovered, right? Microsoft had a blowout earnings gap and it faded 9%. I can see something very similar on Nvidia happening this week, right? And what's that going to do to the markets? It's going to drag it lower. Nvidia is huge. It's 8% of the S&P market cap. Okay, so it is a massive, massive influence on what this market's ultimately going to be doing. So if we blow the top out, I see that fading hard, and I'll look at trading that for newsbreakers, and I'll look at trading it for pinch because if it pops up with a good setup. Okay, there you go. Standard daily profit play 195 out of 155. Very nice. Yeah, I should be seeing some profit on this one here. Standard. Yeah, I'm up about 18% on my standard. Good. Okay, I'll keep an eye on all of these. Waterfall. That one's fine. SPX, this one. This one's probably going to be, I hate to say it, but this one's probably going to have to pay us like after NVIDIA on Wednesday, which is unfortunate because I don't really want to deal with that volatility. But this is a Friday expiration. We do have a potential $5 profit trap, the 65.35 currently going into the end of the month. 65.35 is right around, there's still like an 83% chance of profit on this trade. So I'm still willing to ride it out. It pays potentially $660. I'm hoping that 6,500 call wall will still hold. So anyway, just watching that for waterfall income. All right, I want to switch gears here. Pinch point scanner. Okay, if you've not seen this, pay attention. I'm going to be running a 3-day masterclass this week, Tuesday, Wednesday, Thursday, on my pinch point scanner. These are like spoon-fed trades. I mean, I've traded more tickers on pinch point scanner than I've ever seen before, and that's a good thing because it's like these are needles in the haystack that the scanner can find for me that I never would have thought to find on my own. And all it is based on the logic of coiling, the logic of pinching, the logic of we've got to have that volatility and energy going somewhere. And usually in a 30 to 60 day swing environment, we can get those trades to hit.